You're watching the Daily Market Comment by Rafi Boyadjian. I'm Maria Bashardvis. Thanks for joining us at XM.com. Risk appetite recovered somewhat on Wednesday following the knock from Apple's profit warning yesterday, which elevated concerns about the impact from the coronavirus outbreak. The number of new confirmed cases of coronavirus in China fell for a second day on Tuesday, though there was a spike in the number of deaths. Stocks in Asia headed higher on hopes that the outbreak is easing, while expectations that policymakers globally will provide enough stimulus to counter the hit to their economies from the epidemic further encouraged risk-taking. Chinese equities were the exception, however, as shares slid despite reports that the government is considering measures to bail out the country's stricken airlines that have been one of the worst affected from the travel restrictions. The improved mood wasn't enough, however, to stop gold's ascent, which extended yesterday's strong gains to climb to 6-week highs today. Although skepticism that the virus impact will be short-lived has been contributing to the yellow metal's latest upswing, geopolitical risks were the main culprit for the surge in gold prices on Tuesday. In FX markets, the safe haven yen was pressured by the risk-on tone, falling sharply against the risk-sensitive antipodian currencies, as well as the US dollar. However, against a basket of currencies, the greenback was marginally weaker as the euro firmed slightly. The euro took another tumble yesterday as Germany continued to produce negative headlines. Germany's ZEW Economic Sentiment Index plunged in February as businesses were hit by worries about the impact from the coronavirus, which has only added to the eurozone's many woes. With no turnaround in sight to the bleak outlook, the single currency skidded to 34-month lows. Amidst all the gloom, the dollar continues to stand tall among its peers, as the American economy is still a safer bet for investors, even as Treasury yields flash warning signs of a possible recession. Traders will be hoping to get some insight into how worried Fed policymakers were at the last meeting at the end of January about the virus when the central bank publishes its minutes at 1900 GMT. This was today's Daily Market Comment. Thanks for joining us at XM.com.